right, I guess we should get going, huh? Come and tell-vous, how are you? Everything good? Hey, Mom, turn down the music. Gee whiz. Adults these days. Mom! Turn down the music! Gotta do my live stream. Thank you. All right. Good morning, everybody. My name is Wayne. I'm a currency trader just like you. Trying to get through life alive. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Hey, so let me know how it can help. The whole reason for me to gather with you every morning is I want to show you how to plan your trades in advance using technical and fundamental analysis. So ask questions. In the description below, there's a link to my book. There's a link to training courses, free and paid. A whole whopping $88. I don't know. Dig deep, come clean. Don't be a holdout machine. What else? A link to tradersway.com, a trustworthy, ethical foreign exchange broker. And you might say, Wayne, isn't there a lot of those? No. No, there is not. Traders Way is special. You should try them. Open up a demo account, see if they can earn your loyalty and respect. They earned my loyalty and respect 7 or 8 years ago. All those links are in the description below. Check them out. So it's true, there's not a lot going on in the world today because what? We got the Fed meeting tonight. Then we got the Bank of Japan meeting, or I should say the Fed meeting this afternoon. The Bank of Japan tonight, Bank of England, Swiss National Bank tomorrow. There's a lot going on. So in many cases, we're in pause mode. But you could be scalping. You can see I got a little scalp here. It's not a particularly good scalp. It's just a scalp. That's what scalping is all about. So one of the things I'm looking at is the low of the open. So I'm short at the low of the open after a break. Now, because of the sideways action that we've had, aka lack of trend, over the last few days, we've had like breakdowns and then pop-ups and then pop-ups and breakdowns. And that's because, well, on the bigger time frame, it's a sideways market. Probably because of all the central banking. Now, somebody said, hey, man, there's a lot of oil going on or oil scalps. That's true. So what I got going on here is just the sell off the bottom. It's not much of a trade. It's just a trade. But if you look at the 1 minute, look how interesting the 1 minute has been, right? Where you have a drop, lower low, grab the old low, come across, and you have a lower high sell. Then you have a lower low, so drag the old one across. There's another sell. New lower low. Drag this one across. You'd probably sell somewhere in here. That failed. Higher high. So you drag this one across. Higher low. Higher high. And if you're a bull trading up, you would have bought right in here. And now your plan is higher high. Then you're going to drag this across. And then you'll end up buying it here later today. Or it'll collapse on you and bears take over. That's what scalping's all about. You don't know because you lack the bias, right? But you are trading price action. So if you're doing that on a 1 minute, hey, it's been interesting. Okay? And I'm already out. Just like, again, it's just a pissy little scalp. Okay? All right. So take a look up in here. Gold still coming down, but not going down, but not going up. Probably waiting for the central bank meeting. Take a look at Bitcoin. Not going down, not going up. Probably waiting for the central bank meeting. Okay. Makes sense, right? Taking a look at short-term currency indices. Yen's still quite strong. Dollar's still quite strong. Swissy's still quite strong. Good. Okay, all three central bank meetings are coming up, as well as the Bank of England. So for those that have been heavily short recently, they probably have taken some profit. Or really it's risk off. No, I mean, taking risk off, not that it's not risk off, it's just that there's risk to the risk off because we don't know exactly what the Bank of England's going to do. So therefore that is risk. So they just take some profit. So they've taken risk off their risk off. And Aussie's still weak. Euro, right? Euro now weak. And Kiwi is still weak. So probably lots of mediocrity in the markets right now. And that's okay because, well, that's how it is. Okay. I bought this, but look at that. My stop moved. I have a trailing stop somehow. I don't remember putting a trailing stop, and I don't remember moving my stop. Huh. Whale oil B. MR fish. Trailing stop. None. I guess I moved my stop? Why would I do that? I wouldn't want a small win like that. What am I in? I'm in at 70 and my... Why would I... Why the hell? What the... Why would I want 17? Ugh, I would never do that if I were me. What the hell? Why would I want a 17 pip stop? That would ruin everything. Gee whiz, I'd much rather have -3 than plus 17. How embarrassing. Gee whiz, I don't know what that was all about. All right, anywho, so that is maybe going up. Maybe. We'll see. I'm still a bull on the dollar. I'm still a bear on the yen, but all of that can change in the next 24 hours. So at least I got my stop at break even. Nothing else really going on in the world today. Like, for example, you might say, oh, but Wayne, we're at the central pivot point on Kiwi yen. Maybe I should buy it. Well, I'm fundamentally a bear on Kiwi. So if you want to buy it, that's up to you. I don't buy things just because they're technically buyable. Okay? So you can have it. I don't want to own it. Now, if I had to choose between the two, Aussie and Kiwi, I would choose Aussie. Only because it's a bigger economy and all that kind of stuff. And there's somewhat maybe kind of a double bottom here. Okay? Certainly not as weak as Kiwi, because remember, Kiwi is on the monthly central, and Aussie is on the M3 as support. But look at the moving averages. What do they say? Not up. So if you want to trade that, you take the risk. It's a free country. Huh? It's a free country. Not only do you pay taxes, every once in a while they pay you back. How nice is that? Plus, the power is on 24 hours a day. America, I love this country. Jumbo! Perfect timing, by the way. I just took a jab at South Africa. Huh? America. You pay taxes. Sometimes you get taxes back, but you always got power. All right, let's see what's on your mind instead of what's on my mind. Everyone's on the pig and then euro. That makes sense. Yeah. Hey, by the way, is it true that Johannesburg has a Russian-made nuclear power plant that's now being repaired by the French? That's like the funniest thing I've ever heard. Oh my God. Have you ever owned a French car? Dude, I wouldn't let the French work on a power plant, but then again, I wouldn't have had a Russian nuclear power plant. Yeah, that's right. Yeah, I caught that too. Wouldn't that result in a weaker yen? Maybe. Yeah, right. Do I have a Russian car and a French mechanic? I mean, it's just funny. Oy vey. Is that right? A Peugeot 504. I'd have to Google that. All right. What's going on? So I'm short pound. Looks like I added to my short last night and it dropped from 1375 to 13. Cool. That's nice. Didn't even check my positions. 775 pips. Cool. It was only 500 pips yesterday. Cool. I made 250 pips last night. Right? I'm like Yosemite Sam. Yo! Rootness, tootness, Forex trader. Hey, that's the power fundamentals. That's the power fundamentals. Of course, everything could change, so let me move my stop. Cool. Let it run, baby. It's hard doing nothing all day. Hey, well, I got to look pretty, though. It's a burden. Aussie's still coming down. There's the top of our roll reversal. This was sort of Friday, Monday trade. And now it went from almost 68. Well, we'll call it 67 and a half. Now we're at 65 and a half. So it's down 100 pips. But notice that it's just down to the lower bounds of our range. But this is sort of a trap and break strategy. A Peugeot 504. Was that a 5-liter engine? Or is it 5 hamsters? Peugeot. I got to look at this. What is that? How old is it? I remember the old Peugeots that had the hydraulic suspension. So you would park it and then it would sit down. I think that's a Peugeot. Yeah. Yeah, those are the good ones. The last time I was in Paris, believe it or not, I was sitting at a cafe smoking a cigar. Really? That doesn't sound like you, Wayne. Anyways, I'm sitting there and Peugeot pulls right in front of my little round table, right, with my cappuccino and my croissant. And it pulled right up to like a parking spot and then it sat down. I'm like, yeah, man, I love those cool cars. Is that a Citroen? Okay. A 1997? Well, that's not that old. The one I'm talking about is like 60s. I don't know, Sky Killer. I'm trying to work less. The only thing is I'm working like 15, 16 hours a day. So I don't know, man. I'm going to say no. I prepare you every day. You should be prepared. You should be prepared already. Morning, Meta. Mm-hmm. I mean, think of it like, let me ask you a question for everybody here. What's a key indicator that raising interest rates has slowed the economy down? Raising interest rates has had an effect. What is one of the things that you could watch? Something that comes out more than a monthly, because that's a bit slow. I mean, we had the CPI come out and it was still high, but that's monthly. So now you have to wait monthly. Is there something that we could watch? The 2-year yield? Well, that's an indication that the market participants believe interest rates are going to continue going up. But it doesn't show you that something fundamentally has changed. Jobless claims. Thank you. Richard says housing, but that doesn't come out very often. Retail sales, again, is just monthly. So what I was going for is jobless claims. Again, PCE is monthly. I need something with more frequency, right? A high frequency release. And that would be weekly jobless claims. And we're well below 300,000. There's no indication that the economy has slowed yet. So that'd be one thing to watch. And then all your other answers for the monthly indicators are good too. But retail sales, PCE, housing would all be directly impacted by jobless claims. So if you lose your job, you're going to spend less. So that'd be something that I would watch. Make sense? Because we get it every week. So if the Fed is cooling off the economy, that would start trickling up. The mayor is talking about the dual mandate at the Fed, but the other mandate is to control prices. Prices are high, and we're above, not the word isn't maximum employment really. Okay? So we're likely above full employment. So I made a call 2 years ago when COVID hit. I said that when the economy rebounds from COVID, that the natural rate of unemployment will be more like 4.5. Okay? As the economy becomes a little more socialist pig dog, you're normally going to have a higher rate of unemployment. See, like Europe is capitalist, right? No doubt about it. Europe is capitalist. But it has a more social version of capitalism. And they systemically have 6 and 7% unemployment. Even when times are good, they have, 6% unemployment. So I think as the United States, now that we've gone through COVID, and in particular because we'll have higher levels of inflation, because remember, we have $5 trillion too many dollars. So the consequence of that will be jobs lost, and the new natural rate of unemployment will be like 4.5, not quite 5. And so I would argue, if we're at 3.6 and we should be at 4.6, that those jobs will need to go away. And you watch. One of the things I pointed out is post-COVID, everybody thought we'd go right back to what was happening before, when money was free and the Fed was pushing up the market. Well, now the Fed is pushing down the market. It's different. It's the opposite. So what Amazon did and a whole bunch of other companies was they expanded their warehouses and they hired a whole bunch of employees because they thought we'd go right back to where we were. Well, I don't think we will go back to where we were. Right? This is what I was saying 2 years ago. And so the companies that hired as many people as they could because you couldn't find people to hire, they hired a lot of mediocre people. And what we're finding is now that they've hired all the mediocre people, employment numbers went up, but productivity went down. The people they hired are not very good. So they've hired them, but they don't give a crap about their job. We're starting to see that in various statistics. What do they call it in Japan? Quiet resignation? Like you don't care about your job, but your job is better than quitting. You earn more money, but you don't really care. What is it called? Quiet retirement. Anyway, and then there's the laid back and lean back and all that kind of stuff. So anyway, so all the people that, not all, but many of the people that got hired in the desperateness that many U.S. companies had, they're going to get laid off because they're not productive and they're not worth the money. So you have to pay them too much money and you're not getting enough return. Silent quitting. Thank you. Quiet quitting. Yeah. So that's what's going on. And remember, the basic math, like if you have an MBA, you know basic things like this, where if you hire an employee and pay them $33,000, they need to produce $100,000 in value creation for the company. Otherwise, you lose money because there's costs on top of all of that. So if you hire an employee and pay them $33,000 and they're not adding 100,000, maybe they're not even adding 33,000, then very quickly, right, management starts analyzing things and they're like, we need to cut back. Our expenses are through the roof and our revenues are going down and we're worried about a recession. So we got to trim some fat. Well, who do you think they're going to lay off first? So we'll go back to now the natural rate because you could argue, and now I'm not arguing this through a humanitarian point of view. I'm arguing this through an economic point of view. So those people would have been unemployed anyways, and now they're back to being unemployed because if you were think of it this way. If that person earning $33,000 was adding $100,000 worth of value to the company, there's no way in hell they would be laid off. So if you're laying people off, they deserve it. They need to be laid off. And they go right back to where they were. It's harsh. Oh my God. But that's an economic point of view. I'm just adding up the numbers on the balance sheet. I'm looking at free cash flow. I'm looking at profit margins and all that kind of stuff. If you don't have free cash flow, if the profit margins are falling because we're going into recession, then you got to lay somebody off. And who are you going to lay off? The least valuable people. Now, sometimes I would argue you got to get rid of the middle management more than you got to get rid of the frontline people, but still. Hamas says, hey, what about central bank intervention? Can you explain it? Yeah, they're intervening to try to break what is naturally happening. There's no sort of secret to it. If everyone's buying the currency and making it too strong, you sell the currency and try to push them out. You try to weaken it and say, don't buy our currency. Or if the currency is too weak and they want it to, right, go up, then they buy the currency. That's all. You try to push people out. The one thing I can tell you, Hamas, is it never worked. I've never seen it work. I've seen it done many times, and it doesn't work. So why do they do it? I don't know. Why do people sell its support? I don't know. What's up, Danny boy? So anywho. So my advice to traders last night was, don't be overly enthusiastic for today. Don't make too many trades to front run. Don't respond too quickly. Go back to your original game plan. Are you risk on or risk off? And you're like, I don't know. Then don't trade at all today because you don't know how to trade. Oh, but I only trade price. All right, go ahead and trade price today. But don't be shocked if it's bearish and then it goes bullish and then it goes from bullish and goes back to bearish and you get beat up because you're not adding any value. You're just reacting to what everyone else is doing. Now, why does the market go up and down when there's high volatility around a news event? And you're like, the market's manipulating. No, they don't care about you. There's not professional traders hunting your stops. Are you kidding me? You got one mini lot. Hey, how many mini lots can we kill today? Nobody thinks that way. I've never once sat down with an institutional investor that said, yeah, we're in the game of hunting retail stops. Never heard of it. It sounds like some guru on YouTube selling you a course. Oh, it's not your fault. You're being manipulated. Huh? That sounds like the Romans throwing bread to the crowds to ensure that the crowd doesn't riot. I don't know. So instead, what is going on? Well, why does it go up and why does it go down? Let's break this out maybe on a bigger time frame. And it's because of something like this. Some traders are bulls and they say if this drops to support, buy it. So there's a bunch of orders down there. Billions and billions and billions of dollars worth of orders. And then some are bears and they're like, wow, if this goes high, and there's billions and billions and billions of orders up there. And so you get stuff like this. Down, buy. Okay? And then up here, sell. And we end the day right here. And everybody got what they wanted, and retail are like dogs chasing their tail. And they're like, oh, I got manipulated by my broker. Why don't you take some responsibility for yourself? Huh? Oh, that's harsh. I know, dude. Listen to the lesson. Don't get all emotional. Jesus, Murphy. Hey, dude, take some responsibility for your trading. How dare you talk to me that way, Wayne? Just relax, man. You're so emotional. So what's your plan, Stan? What I'm telling you is professional traders have a plan. They have a bias. They have a strategy. They know what they want to do. Richard. It is funny, though, huh? Dude, did that... How, like, come on, be honest here. Did that irk any emotional response when I said that? It just feels bad, right? But I'm trying to talk to your emotional brain, not just your intellectual brain. Because your intellectual brain says this. Yeah, that makes sense. And then you go do something else. Along with the capital flows. But we know all of that, right? Yeah, right, Robin? Robin ain't stealing. Well, no, honestly, though, you have to think about it. Like, if I say things like that and it creates an emotional response, and particularly a negative one, dude, right? Like, it's like I threw out a jab and your knees buckled. You're like, whoa, dude, really? You got to be careful, man. Got to be careful. Got to be stronger than that. Okay? So, like, look, the way I teach you is that you have a fundamental bias, and I can show you the numbers. That's where I get my fundamental bias. But look at what's going on here. This is showing showing you that there isn't like institutional investors hunting your stops. They're all trying to get your mini lots. Like, really? Look, I'm going to show you something, and it's how to trade properly. Okay? You can't quite see it, but it's behind that entry, that button. Okay? Look, that's where they sell. Whatever you're doing is probably different, and that's why you're frustrated. Okay? By the way, when we were here, we were talking about, hey, get ready. Fed meeting. Okay, but whatever. Like, you're doing something else, and you don't understand, like, this process, right? Up, and then consolidation. Up, right? Up, down, consolidation, right? Down, consolidation, down, consolidation, down, consolidation. And you're getting caught up inside of here. You're getting caught up in here. Okay? These consolidation areas are probably where you're losing money. Thanks, Hamza. Okay? So you're getting caught in the noise. That's what I want you to point out. There's no institutional trader trading against you in here. You're trading against yourself. Yeah, but right, Ren? Like, it's a good idea not to trade against the big fish. But the thing is, look, I know you can do this. Okay? I know you can trade that way. And look, it's also plausible you could trade this way as well. That's not how I teach you, but once you understand there's a big drop, there's going to be a pullback. And and you'll notice too that often, maybe not always, but like these moves, like we'll say this period and then consolidation, and then this period and then consolidation. Okay. And then, right, this period and consolidation. You'll notice that very often they're pivot points. So in a downtrend, you sell near the top, it goes down, there's profit taking fairly early in the month. Then there's up, up, up for 2 or 3 weeks. And then there's down, 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 down. And then there's profit taking and there's up, up, up. What I argue here is that the up isn't even bulls. It's bears taking profit and then they re-enter. Bulls taking profit, then they re-enter. Bulls taking profit, then they re-enter. Richard says that's a mean reversion strategy. Sort of, yeah. It's not necessarily, because very often mean reversion people, just to be clear on that, okay, Richard? Because you're right, it is just going back to the moving average. Very often the mean, I would say almost always, the mean reversion strategy is that prices move too far from the mean and that it will revert. So you're buying back to the mean versus selling off the mean. So you would say that's a mean reversion strategy. But because what I'm trying to teach you is, this type of trading, it's the proper term for that would be trend trading. And the reversion trade is back to the mean, back to the mean, back to the mean. Okay. Yeah. GFI, that's interesting. Hey Frank, I heard what's his name died, the owner of that company. I don't remember his name. He was an Englishman, I think, wasn't he? Position trading that would be fundamentally sound. Well, you'd have to know the fundamentals to trend trade, right, Mayor? But also the next step, like an institutional trader, because they are fundamentally based, what they would do is add one here, add one here, okay, add one here, add one here, so on and so forth. Is that right, Hope? Oh my God. So you got to know fundamentals. I think the main reason you need to know fundamentals is that you need confidence to let the winners run. If that's all it brings you, then that's enough. And once you learn it, you'll see it. Like today, I just looked at my positions. Oh, I made 250 pips today. Oh, that's good. That's a hell of a good day if I was scalping. That's a good day if I'm a scalper. You scalp 250 pips. But then it also takes a lot of work, doesn't it? Not only is that a great day scalping, that's a lot of work. That's a lot of trades. Where I just wake up, I'm like, oh yeah, that's good. Oh yeah, good. Nice. Sweet. What would you, right? Nice. Cool. That's good. 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 Nice. So I think we looked at all this already. Okay. Yeah, look at that trade I caught last night. Look at how beautiful that is. Man, oh man, I barely got that. Look at that. This trade, this wick down here, was probably just enough to catch the spread. And it looks like probably within 5 minutes I was profitable. Cool. So I'm in at, what is that, 1440? So it's only 60 pips. Cool. Oh, trading the wicks. Oh my God. Sleepy, man. All right, I think we're done here. We don't have to belabor the point. We got to see what's going to happen from the Fed, the Bank of Japan, the Bank of England, the Swiss National Bank. This is a big 24 hours. Is that right, Peter? That's interesting. Beautiful trade? No. Well, first of all, thank you, but I'll tell you why no. Here's what I did. This is what we did in the day trading group last night. Okay, I think it was maybe, I guess it might have been an hourly chart or a 4-hour chart last night. I can't remember. Okay. And so at that time, these moving averages were obviously below. It must not have been. It must have been a 4-hour. Yeah. So here's what I did. Okay, we were here last night. And I said, if it comes down to the moving averages, buy it. That took me about, what, 6 seconds? And I put a stop on it. I have an auto stop. So I put a limit order. Price came down, hit the moving averages. I bought it. The auto stop threw down the limit. I logged in this morning. Oh, look, I'm up 50, 60 pips. Cool. I moved my stop to break even. I'm done. There's nothing beautiful about that. That's just a trade. Right? And there's sort of a dual lesson going on at boot camp, and they're both right. And maybe it's confusing, maybe it's not confusing. But Ryan is teaching patience, discipline, regiment in the analysis and the trade planning, which I love. And then I also teach something of the technicals are very much the same. I use a lot of fundamentals. I know Ryan understands all the fundamentals, right? But what I say is I'm not asking for perfection. Now, you should try to be perfect, especially when you're learning. You should develop the regiment and the focus and the discipline and the strive for excellence. But I also then say, okay, once you got that down, investors are not looking for perfection. The market's not looking for perfection. You need to know how to read the market and understand it. So the only way to read the market and understand it is to learn how the market works, and you have to strive for perfection. If you're a sniper, you can't be pretty good. Because what happens to a sniper if he, misses? They all turn around, they're all looking at you. And they're like, look, there's a sniper up there. And now you got 10 guys that are going to come up there and kill you. So you got to be perfect with your weapon. You got to train for perfection. But at the end of the day, I don't really care about your winning percentage. So I got a reasonable trade set up. I threw down. I had proper risk management. And I entered a trade in the direction of my fundamental bias. What did I do? I found a higher high, higher low. So it's not the dumbest trade in the planet. I wasn't being like foolhardy, but I wouldn't argue that it's a beautiful trade. It's just a trade. That's a boring trade. That's a mediocre trade. I wouldn't call it beautiful, but we've already tested the top twice. And it hasn't right, collapsed. So it doesn't smell like a lower low, lower high, right? Because like, what does the double top predict? Technically, right? Isn't that what's supposed to happen technically? And so at this point, I'm like, okay, we got a double top. So we got confirmed resistance, but it came down to the roll reversal. It's been holding. It's kicking off the, right? This is a weekly buy zone. You can see my horizontal line and everything, right? 142.64, 63 was the plan we had last week. Okay. And now we're, right? Now, if I asked you to draw a MACD, you should have a MACD above the waterline and rising. So, you know, it's just, that's a nothing. It's not beautiful, but I appreciate the positive feedback. I'm an only child. I love it. But then I judge myself as a coach and I'm like, well, I'm not pawning that off as a beautiful trade. It's just a trade. But what am I doing? I have the technicals. I have the price action. I have the market trade, which is, right, the pivots. And I'm trading in the direction of my fundamental bias. I'm a bull on the dollar. I'm a bear on the yen. So it's just a trade. And at this point, I can't lose money. So maybe that's what makes it beautiful. But, you know, it's just what you're supposed to do. I had a choice there. Buy it or don't buy it. Was there a choice of sell it? Absolutely not. Never in a million years could I have sold it. So my thought is I can buy that and see if I can get lucky. The Fed jacks up interest rates and the Bank of Japan does nothing. If that, boom, I'm going to make 300-400 pips on this trade. If it goes down that way, good, I'm in. I can't lose money. Hero or zero. Maybe tomorrow, right? Maybe tomorrow there'll be parades in my honor. The beautiful trade, Wayne. At the end of the day, I got lucky on the Fed meeting and got lucky on the BOJ meeting. But I didn't get lucky on the technical setup, but it's not beautiful. I'd call that like just another trade. But if I was worried about my winning percentage, I wouldn't have taken the trade. So maybe that's 20 years of experience going down. I'm like, yeah, it's just a pissy little trade. But to get there, there is more than 10,000 hours of hardcore work. Probably 30,000 of hard work. So if that presents itself as a profitable trade, I would say the trade is just another trade. But the beauty is the 30,000 hours of effort to make that look casual. Okay? But then again, when Michael Jordan dunks over me, it's a beautiful dunk. But I'm going to foul that bitch. One thing you can learn about, right? One thing you can learn about the Detroit Pistons, you can't get fouled twice. You remember that in the 90s? You remember that in the 90s? I forget the coach's name from Detroit. Tough guy. He's like, you can't get fouled twice, so don't let Jordan in the air and you know, hit him 3 times. Foul him 3 times. Do you guys remember that? It's like punch him, hit him, kick him, body slam him, but don't let him in the air. He'll have to do it through free throws. But after being fouled the 15th time, maybe he'll pass the ball, you know? What was that coach's name? Oh, man. I can even see his name. See his face. I don't know. Anyways. The Chicago Bulls. Can't get fouled twice. Mike, if you step in the paint, I'm going to hurt you. You imagine? He'd still dunk right over me. Like, he'd jump over me. I heard a story that even though when Jordan was well into his retirement, years and years into retirement, I mean, this might have been like only 3 or 4 years ago. So he's old, he's fat, he certainly doesn't play basketball every day. And one of the new NBA kids was talking crap about Jordan that, you know, if back in the day, if he can go back to back, he'd be better than Jordan. He could beat Jordan in 1-on-1. And apparently Jordan's so competitive, and this is well documented that he's this competitive, but he got on a plane, flew to the other team on the other side of the United States and showed up to their practice. Walked right on the court, dressed to play, went right up to him, and he's like 1-on-1. And he whooped him. Jordan whooped the young kid right then and there. The young kid in his prime versus fat Jordan. There you go. Thank you, Chuck Daly. Thank you. Anyway, so Jordan, and this is just a few years ago, fat, retired, 50-year-old Jordan, 1-on-1. Right then and there against the young buck in his prime. Heckling him all the way through. Beat him on the 1-on-1. Packed up his shit and got back on his private jet and flew home. You're like, yep. Cool, man. He was that good. So this is what we do while we wait for the Fed. Yep. So anyways, what's beautiful isn't the fact that he beat the young kid and kind of punked him, made him feel bad about himself. That's not what it's about. I would say it's the 30, 40, 50, 60,000 hours of hardcore practice that Jordan did to get that good, where fat, old, rusty Jordan could still beat an NBA player. Just there's one thing, if you watch, you go on YouTube and it's like, how good is an NBA player? There's this one I remember. This guy played in the NBA for 10 years, but was ranked so low that he didn't even come up in the rankings. So once you did find him in one of the ranking databases, he was like third last out of 390 players or whatever's in the NBA. He was like 378th. And that guy, again, in retirement, fat, in his late 40s, can beat a really good young player. Like, it's not even close. He could still beat you. So for Jordan to come out and beat a really good young player, 50 and fat and rusty, shows you how really good he truly was. Yet alone just beating a really good amateur. So I'll leave you to it. Peace on earth. May the pips be with you. May your profits be above average. Remember, the beauty is in the practice. Okay? When I was a coach of the Science Olympiad team on industrial engineering, aka bridge building, I had a shirt that said act like can't even do it. My shirt said act like a champion. But it also said practice like a champion. Practice like a champion. Beautiful trade, poppycock. But practice beautifully. That's just an open shot. If I miss, I miss. Doesn't matter. Right? If you miss the shot, it doesn't matter. At the end of your career, they just count the rings on your fingers. Oh, you missed 30,000 shots. Yeah, I know. Look at all my rings. Okay? So I'm not going for perfection, but I do believe you need to be well-trained, well-focused, well-informed, so that you have the confidence to take the shot.